The U.S. economy added 177,000 jobs in April, higher than economists expected but a noticeable drop from March. It signals a mixed outlook, with continued strength in hiring but slower momentum. Despite the decline, the labor market remains resilient. The unemployment rate is at 4.2%, which is still near historic lows, offering a cushion against potential shocks. Growth in sectors like healthcare and warehousing continues. Warehouses are likely ramping up due to companies importing goods ahead of new tariffs. Federal employment took a hit, with 9,000 government jobs lost in April and around 26,000 for the year. This may be undercounted due to how furloughed or buyout employees are classified as still employed. The White House is framing the April jobs report as a positive sign, emphasizing that job growth exceeded expectations. Officials see it as proof that President Trump's economic policies are working. Still, concerns about a potential recession linger, largely due to the administration's ongoing and unpredictable trade war, especially with China. General Motors has revised its 2025 outlook, estimating a $5 billion loss from tariffs. This reflects broader economic strain across industries. McDonald's reported its lowest sales since 2020, and Microsoft announced significant price hikes for Xbox consoles and games. A major change also affects online shopping. The U.S. closed the de minimis loophole, which had allowed cheap goods, under $800, from overseas to enter duty-free. Platforms like Shein and Temu are already reflecting these changes. Import fees are now visible at checkout, making ultra-cheap deals a thing of the past. Consumers can expect price increases across many products, including basic items like clothing, electronics, and home appliances. Tariffs on auto imports go into effect next. Car prices could rise by $2,000 to $12,000, and insurance premiums might jump by about $300 due to higher repair and replacement costs. Executives and economists are worried about the volatility. It's not just the tariffs themselves, but the unpredictable, escalating rates that make it hard for businesses to plan. Some inventory buffers remain, but if tariffs persist, store shelves could start to thin out and prices may rise even further. Meanwhile, trade talks with China remain murky. Despite U.S. claims of ongoing contact, Chinese officials insist no real negotiations are underway. China has stated it won't negotiate unless the U.S. rolls back tariffs. While both sides may want to de-escalate, finding a way to save face will be key. Experts warn that unless stability returns to trade policy, the longer-term economic impact could be severe, even if short-term numbers appear strong.